Tuesday, warm welcome to everybody who's joining us for the first time, and welcome to today's edition of Toggle's Daily Video Insights. For those of you joining us for the first time, this is our morning review of one of the insights generated by Toggle AI, and we do these every morning. So if you'd like to see more of them, sign up to our YouTube channel or check us out on toggle.global. The focus today is going to be on Six Flags, a company many of you will be familiar with, and as you see here, the latest insight generated is actually based on investor sentiment and suggests that there could be potentially 18% upside within the following 6 months, so it could be earlier, for this particular stock. Now, as we all know, leisure and hospitality industry has been hit quite hard, and so many are looking for potential investments that could benefit from improving economy. This certainly fits the bill. Clicking on this takes us into the actual insight where we're able to see what the drivers are that the Toggle is currently highlighting. Remember, again, as always, the point here is that Toggle tries to generate not an entire investment thesis for a stock, but instead very likely drivers that could power the particular asset price over the next couple of months. In this case, what it's suggesting is over the next 6 months, Six Flags could rise by just a shade under 18%, and there were 15 similar occasions in the past that Toggle had analyzed in order to produce this projection. So what we see here is the starting points of 50.52 that could rise all the way up to 59.59, with the red line 45.99. Now, as you already know, you would like to see the price staying within this shade green confidence interval and certainly not dip below the red line, where the odds of this driver still being operative are greatly diminished. Now, why might it move? So the goal here is to actually highlight that when you've had a little bit of a pickup in economic optimism down here and a relatively high level of US investor confidence, that this typically has been a period during which, as you can see over here, the stock had done relatively well. So what we're highlighting here are the past episodes, a total of 15, where you had a similar combination of policy uncertainty, economic optimism, and street investor confidence that would power the stock higher. Now, looking at the backtest, which is again something that's always worth taking a look, you see that actually the majority of past returns during these periods have been positive, but there have been a couple of occasions, particularly during some of the crises, where actually if you didn't respect the red line, you really got hit very hard. And in particular, this was the case obviously in March of 2020 when the pandemic caused the stock to really tank. So very strongly suggest that you always take a look at the backtest, and so in this case be aware of the fact that this is obviously a stock that also would be very sensitive to a second wave of the pandemic. So much for Six Flags today. We'll be discussing in our daily brief more on what a potentially second fiscal stimulus this year could look like. Those of you who have subscribed, your daily brief should already be in your mailbox, and those who haven't, go to toggle.global and it's free to sign up. Thanks again, and we'll talk to you again on Wednesday. Thanks.